the markets are telling us that we should be damn scared about what the government is doing with our deficit.
Digital assets, they add diversification benefits because they're uncorrelated.
Crypto is now an asset class. It will be next year. It will be forever.
Crypto is being drained from exchanges like we've never seen before. Bitcoin and Ethereum have been leaving exchanges for years, it's true. And yet we're now still seeing one of the steepest drop-offs ever. Why? Well, we know that crypto regulations are opening up in the US. Crypto is now a major campaign issue, and that's really what it is, why we're seeing this happen. And you know what? This is only going to get more exciting over the next 11 months. A lot of people don't realize how perfectly on track we are for one of the craziest cycles ever. Billionaire investor Mike Novogratz of Galaxy Digital explains why the crypto markets are now stronger than ever.
5 months into the spot Bitcoin ETFs, roughly $58 billion in assets under management across all of those funds. My question, though, is more about the institutional interest. So I was going through all those 13F filings, looking at which banks newly had exposure to Bitcoin through this spot ETF. And it's not a lot. You know, Morgan Stanley, $270 million. Not all the banks have exposure. And the ones that do say that this is more a reflection of what their wealth management clients are asking for, not an endorsement by the bank of this asset.
But you wouldn't expect a lot of banks to put Bitcoin or Google stock on their balance sheet. Listen, we're seeing movement. Prices are significantly higher in crypto than they were 3 months ago, trading close to the highs. And that's with interest rates giving us no love, right? At the beginning of the year, we thought the Fed was going to cut 5 to 6 times. Now they haven't cut at all and don't look like they've cut. And so the crypto markets are strong because we have the sentiment shift. Crypto is now an asset class. It will be next year. It will be forever. And it wasn't that way 2 years ago. There was risk around the asset class. And it's been de-risked. And so every day, some Morgan Stanley salesman is picking up a phone and trying to sell one of his high net worth clients crypto. And you're just going to see a constant drip of money come into this space and prices go higher, especially as long as the government keeps spending.
By the way, this is exactly what Bitcoin analyst Brandon Green said in our recent interview released just the other day. I think this is what's going to happen.
There has been no easement of monetary policy. We're still in very tight conditions, and yet we're at all-time highs. The monetary policy of the United States is going to loosen over the next few months, especially heading into the presidential election. There will be pressure from the executive branch to print more money and pump the stock market and make everyone feel rich again. That's going to affect Bitcoin in a major way, and it's going to pump it to crazy levels.
So right now, Bitcoin is ranging. I'm waiting for a breakout of $73,000. When that happens, I expect Bitcoin to really gear in to its next level. The herd is coming. It just takes time. Mike Novogratz explains.
You've been talking about the herd is coming. That's your catchphrase. Said that a few years ago. We have seen more institutions come into the space. I mean, you come from Goldman yourself. You work with a lot of major institutional names from the TradFi world. What's the sentiment? What are people not saying publicly, but they feel about the asset
They are
class?
waiting for the endorsement from Congress through a bill like Fit 21, through a market infrastructure bill that gives them clarity. No bank that makes as much as JP Morgan or Goldman wants to put any reputation at risk on a new technology when the rules aren't clear. And so if SAB 121 is wiped out, you'll see places like Bank of New York and State Street enter custody. That'll make those places feel more comfortable. But we need the full endorsement from Congress, SEC, and the Fed. And then you're going to see a stampede of those guys into our space. My business is going to be harder because the competition is going to go way up, but it's going to bring a lot of assets in.
So right now, crypto is volatile, but all markets are volatile, and that's precisely why you want to hold Bitcoin and crypto. Mark Yusko of Morgan Creek Digital explains exactly this.
Volatility is interesting in that people fear it, yet volatility is your friend. What you want to do is own volatile assets that are uncorrelated with one another, because all volatility is disagreement about the future prospects for a company.
Hey, real quick, you should join us at Bitcoin Conference in Nashville this year. 10% off if you use the code Altcoin Daily, link and details in the description. This is the biggest Bitcoin conference in the world. I think this is going to be their biggest year ever. I love the fact that this is in Nashville this year. If you want to be part of the culture, celebrate Bitcoin with like-minded people, and hang out with us, join us at Bitcoin Conference Nashville, 10% off. Use the code Altcoin Daily. Link and details in the description. I hope to see you there. So digital assets, cash, and gold are the way to go here, at least according to market expert Mark Yusko. This is why you need to be in crypto over the next 11, 12 months, and some cash.
You think digital assets, cash, and gold are the way to go for the next 12 months? What does that say about your outlook for the markets?
Cash is a choice, right? It's an asset that today yields about 5% while you wait. It gives you the buying power to buy things when they go on sale. Human beings do two things really, really well. We buy what we wish we would have bought, and we sell what we're about to need. Commodities broadly, despite the fact that they're making new highs every day, are at the cheapest price to paper assets they've ever been. And, you know, in the kids' game, right, paper beats rock. But in real life, rock beats paper. So we favor commodities. And you know how I feel about digital assets. Digital assets, to me, everyone needs to have some in their portfolio. They add diversification benefits because they're uncorrelated, because they don't derive their value from the same thing as traditional financial assets.
And one last question, Mark. Do you think that the volatility in digital assets will be dampened as more and more ETFs are approved?
Again, really, really great point. Absolutely. If you think about $58 billion of, mostly retail and advisory money coming into this space, and as they call it, the boomer wrapper, right? So you don't have to deal with hardware. You don't have to deal with software. You don't have to deal with self-custody. You can just buy an ETF just like anything else in your portfolio. I think that number goes to 300 billion over the next couple of years from the 58 today. I think that will dampen volatility. I think it'll lead to much higher prices.
I mean, you are a macro guy. You mentioned the fact that, interest rate cuts don't seem like they are in the cards this year. Are you anticipating any sort of...
Listen, we could have a cut in September if all of a sudden growth slows and you get a little bit of inflation. But we're not going to get the 5, 6, 7 cuts.
And to your point, usually you had Bitcoin track those decisions so closely, and they've just, broken free of that.
But same with gold, same with silver. The markets are telling us that we should be damn scared about what the government is doing with our deficit, right? We're adding $1 trillion of debt every 100 days to our giant pile of $36 trillion in debt. If you're a Wall Streeter, if you're Stan Druckenmiller or Ray Dalio, that's existential to this country. And in an election year, no one's going to talk about it. But we've got a populist left president, and we had a populist right president, and now he's a candidate. And so, populism isn't good for fiscal, stewardship. Populism spends. And when you're spending like that, assets like Bitcoin are going to go higher.
Look, I'm not sure how much clearer I can be. As we get more into this election year, along with everything else, crypto is going to really heat up. So make sure you're subscribed. Now is the time to double down on your awareness and education. Check out our recent interviews for Extra Alpha or any of our videos over the last 6 months. Like the video. Here is Mike Novogratz talking about how he's bullish going into end of year. See you tomorrow.
Predictions for the end of the year. Are we going to see this legislation actually get passed into law? Are we going to see a turnover in the White House? Are we going to see Gensler out?
Listen, I think Gensler is going to be gone at the end of the year, one way or the other, or at the beginning of next year. If Biden or Trump wins, Gary has probably served plenty of time at the SEC. I think the election, we're going to literally go to bed on election night not knowing who's going to win. Right? There's six or seven swing states. They're all going to be tight. Right now, they're all trending Trump's way. But remember, it's a long time. In those last couple months, both parties spent $1 bazillion in those states courting those independent voters. And I just really believe it's going to be one of those, I can't believe we're going to bed again not knowing who's going to win. I think crypto prices are going to be higher. There's a 40% chance we get legislation this year. You're going to have the Senate put together its counterparty. Remember, House passes bills, Senate makes laws. And so they take each little piece of it a little more seriously. You mush those two things together. I do think Senator Schumer will put it to a vote if they do that, and President Biden wouldn't veto it. And so the path is clear. And if it doesn't happen this year, it'll happen early next year.